Hello everyone, my name is Carla Carderera, Managing Partner and Co-Founder of Upfront CPA. Today, I'm going to be speaking about a very important tax strategy that a lot of business owners just overlook it completely. I am going to be talking about accountable plans, and it is a tax strategy that every S-Corporation owner should know. What is an accountable plan? Many business owners are paying expenses personally that every single month that could legally be reimbursed by the S corporation. So for example, it could be mileage in your car, your personal car that you use for your business. That mileage specifically for the business can be reimbursed back to you. If you have a cell phone, for example, who doesn't have a cell phone? If you travel for business, for example, there's a lot of expenses. If you work from home, it's another big one. There's a lot of expenses that you might be paying personally that can be reimbursed back to you through the company, and that represents it's a company expense, so it's deductible from the S corporation. And for you as the business owner, it's a tax-free because it doesn't go in your W-2. So let's go over this in a little more detail. So what is an accountable plan? An accountable plan is an IRS-approved reimbursement arrangement between business owners and its employees. As an S corporation, if you're an S corporation, you own the business, you have to be an employee of your business. So these are specifically expenses that you paid out of pocket that the company can reimburse back to you as an employee. So an accountable plan allows your company to reimburse you for legitimate business expenses that you pay personally. It's deductible to the business, it's not taxable income to you personally, and it's not subject to payroll taxes. It does not show up as wages on your W-2. Instead of paying yourself additional salary to cover for those expenses, you are basically reimbursing yourself from the business to you personally. And again, this does not count as income to you personally. It is tax-free. And it's something that we should mention here that is important. This is not a loophole. This is 100% legal. This is something that every S corporation owner can do. But there are certain things that you have to know. It needs to be very well documented. They have to be real expenses, and you have to show proof of these expenses. So obviously you're not going to make things up. This is going to be something that you have to plan very well, because if you get audited, you have to show proof of your accountable plan, of your expenses. You have to show that they are real expenses, and you have to show how you are reimbursing yourself for these expenses. So this is not an owner's draw. These are actually expenses that are going to be counted as expenses on the S corporation, and you're just reimbursing yourself for them. As I said, a lot of business owners that we work with, S corporations, do not know about this tax strategy, and they could be paying or overpaying thousands of dollars when they can reduce their income by these expenses that are 100% legal for you to be able to reimburse yourself. So I'm going to show you an example. Let's say you pay $100 for your cell phone, you pay $80 a month for internet, and this is for the home office. Home office expenses, let's say it's $300 a month. Business mileage, let's say that it's about $250,000 a month. The total annual reimbursement for this example that I gave you is $8,760. That's correct. That's $8,760 that you are going to take from your business and reimburse yourself for it, and it's 100% legal. I'm also going to speak to you about how to reimburse yourself, and something very important that I need to mention right away is that the reimbursement needs to be done on a time. It needs to be done timely. It means that you have to do it throughout the year. You cannot wait until you file your taxes to say, oh, I am paying this much in taxes, so I'm going to now create my plan and now reimburse myself, and it's April of the following year. No, this is something that needs to be planned throughout the year. So for 2026, at the moment, if you don't have an accountable plan, you have to start working on it right away. Actually come up with a true plan and start reimbursing yourself immediately. So who should have an accountable plan? The best candidates includes S-corporation owners, family-owned businesses, professional service businesses, realtors. Again, we present this plan to a lot of our clients that are realtors because most of them work from home. They work, they travel a lot, they use their personal cars, they buy their own office supplies and items like that. If you're a realtor receiving a lot of commissions and you have an S-corporation to help you save in taxes and to structure your business properly, an accountable plan, please make sure that you speak to your tax advisor to make sure that you have one and you are putting it in place, because believe me, it's going to save you a lot of money. Attorneys, for example, consultants, insurance agents, marketing agencies, medical practices, and remote businesses operating from home. So these are just examples of clients that we currently work with, that we implement these strategies for them, and we see that they save a lot of money in the year in taxes by reimbursing themselves through this accountable plan. What expenses can be reimbursed? So home office expenses, cell phone, internet, office supplies, mileage, travel, and professional memberships. Again, documentation is critical. When you work with your professional to create this plan, we're going to sit with you and we're actually going to go this list with you. These are the items that legally can be expensed or reimbursed back to you. And we get that information from the client, we will always request the backup or documentation that supports what they are telling us, that is, this is how much the amount that they should be reimbursed. Again, documentation, you always have to have it. The plan needs to be done correctly, because if you are audited, you have to present this to the IRS and you have to make sure that you have backup for everything for your calculations. They have to be true calculations. You cannot be making numbers. So you have to always show support. And as your professionals, we are going to ask for that support as we are working on the accountable plan with our clients. So what exactly does the IRS requires? They require a business connection. So obviously what you are saying that is a business expense has to be a true business expense, and you have to provide support for it. The expense must be business related. Again, this is not about creating a loophole. This is not about making up information that is not true. It has to be a business related expense in order to be considered for the accountable plan. So documentation, receipts, logs, and supporting records. In our practice, there is a template that we provide to our clients that we fill out together with them to make sure that they are creating a correct and accountable plan, and that it is structured properly. In case of an audit, it can be presented to the IRS, and that way you don't get in trouble. So timely reimbursement. This is something, again, that is very important. As a strategy, a tax strategy has to be done throughout the year. A tax strategy is not waiting until April, creating your tax return, seeing how much money you owe in taxes at that time, and then saying, oh, hey, I can actually do an accountable plan, have those expenses reimburse me, my company reimburse me for those expenses that I didn't count with throughout the year, and that is going to lower my taxable income, and I'm going to reimburse myself at that time. That it's not the right way to do your accountable plan. The accountable plan needs to be created throughout the year. It has to have true business expenses, and you have to reimburse yourself throughout the year, not in April when you file your taxes, not in January when you actually see your final net income for the year. No, you have to work with a professional to work on your projections, and based on those projections, you can already have the accountable plan set. You have to make sure, obviously, that you have the cash flow, because this is actually money that you are reimbursing yourself from the company. And again, you have to make sure that these are true business expenses. You have your projections, you create your accountable plan. If you have to make any adjustments throughout the year, maybe there is a new expense that you didn't include at the beginning when you first created your accountable plan, those adjustments can definitely be made. But again, your accountable plan needs to be adjusted, it needs to be documented, it needs to be noted, and you have to reimburse yourself regularly. So our recommendation would be monthly or at least quarterly. You can create the accountable plan for the year and just automatically reimburse yourself every month that same amount. And you have to record it, obviously, in your books correctly to make sure that those are showing in the correct buckets or accounts in your books, to make sure that you are recording those expenses properly. So the common mistakes that we see are no written accountable plan. No, it needs to be an actual plan, well thought, well documented, business expenses, and you have to show proof of the business expense. Some people think about accountable plan, they just make up a number. I'm going to reimburse myself $10,000 because that's how much I think I spend on personal expenses related to my business. So I'm going to estimate it at $10,000 and I'm going to reimburse myself that. No, that is definitely a big mistake. That is not a way to legally use an accountable plan as a tax strategy. Another mistake, no documentation. You have to have documentation readily available in case you get audited and you have to show proof to the IRS. Treating reimbursements like owner's draws. Again, this is not an owner's draw. This is an actual expense that you are going to reimburse yourself personally. Reimbursing personal expenses. So no, it has to be a business-related expense. It has to be a legitimate business-related expense for you to be able to include it in the accountable plan. And one that I have mentioned a few times already, but it's very important. Another mistake is waiting until tax season to address the reimbursements. No, accountable plan is a strategy that needs to be worked throughout the year, implemented, and be done. So a real world example. Imagine a realtor, as I gave an example earlier, because again, we see it in our practice a lot. A realtor that is an S-Corporation. After calculating home office, mileage, cell phone, internet expenses, annual reimbursements total approximately $12,000. And this is a real life example. Again, we sat down with our client, we went over the plan, we explained to them what the plan is and how it works, and they were able to deduct from their business $12,000. That is $12,000 that the company, that was deducted by the company and received by the business owner, and the business owner doesn't have to pay taxes on that $12,000 because it doesn't count as income. So an accountable plan, again, is not a loophole. It is an IRS approved strategy that allows business owners to properly reimburse legitimate business expenses. If you're an S-Corporation owner and you're paying business expenses personally, there's a good chance that this can apply to you. So again, if you don't have a tax advisor, please speak to one. You can call us at Upfront CPA. This is an example of one of the many strategies that you can take advantage throughout the year. Again, legal strategies, not loopholes, legal strategies that you can implement for your S-Corporation, lower your taxable income, and pay less in taxes.